Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily Apple report for Monday, February 5th, 2024. But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already, subscribe to the Wicked Stocks YouTube channel, share the content if you would with friends and colleagues, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever. Let's take a look at the charts. I'm going to start with the big picture, work my way into the day itself. This is not a relevant level, but just a reminder that the long-term dynamic remains bullish above 163.22 to 164.64. And what I mean by that is really through the rest of the year, this is solid bottom-picking territory if given the opportunity. And above which I'll still hold to this 236.99 formation as a long-term target. There was a point not long ago as I was expecting within 3 to 5 months following that early May buy signal above this area. But what precedes all that is this significant channel top at 177.25. This is an area that we've fallen back to several times, really. If you count the close calls, last week was another close call. We slipped into the upper 170s last Friday. Yeah, that was a big day on Friday, and I'll get to that in a moment. 177.25 precedes this area. This may well contain selling pressures through March, through the second quarter perhaps, and from here we should push on to new all-time highs in the weeks ahead. I'll get to the parameters for that actually in just a second, but that is the big picture. Bullish, and we'll just wait for another shoe to drop here to the upside. Let's take a look at the support on the daily chart. So you've got the same descending channel top on the daily chart at 176.84. That is at 177.25 on the weekly chart. And you have a new descending channel bottom that is based off that December high against the more recent high from about a week and a half ago, the intermediate low from early January. That comes in at 177.68. So the 176.84 to 177.68 region is the sort of bottom picking zone, not only on a daily basis, weekly basis, but even through March basis. Because from here, once again, we can round up to new highs within a matter of weeks, 3 to 5 weeks. I kind of asked that. Obviously, I'm not sure, but I will say upside today, we have 185.62, and that is a new descending 1/3 speed line that is based in part on last Friday's low. And so really what you're taking is the December high against last Friday's low, 1/3 back up is right pretty much where we close on the line itself. The line is constructed from the December high. It intersects the 1/3 upside pullback point in the time frame in which the low is made. It continues to drop through time. Today's 185.62. So if we push or open today above 185.62, 189.44 is in reach. And if we close today above 185.62, I don't think we're going to revisit the upper 170s anytime soon. I think over the next 3 to 5 days or sooner, we should then reach 192.61, where we can place a daily high. But I will say, I've got these weighted differently. I think after having dipped once again into the upper 170s, that just closing above 195.62, I think will place the 195.99 to 197.97 region in reach as a realistic 2 to 3 week target. And as I just mentioned, on the way up, we've got a 3 to 5 day target at 192.61. With last Friday's volatility, this could be within 1 to 2 days where we could tap out on a daily basis. But for those of you who trade the 2 to 3 week, or well, let's just call it the 1 to 2 to 2 to 3 week time frame, 185.62 is your pivot point. If we open clearly below that on Monday, we can ease back over the next day or two into this significant 176.84 to 177.68 region, where a buy opportunity presents through March trade, and from here we can round back up again. And that is kind of I think this is your 1 to 2 week. This could, with present volatility, this could be 1 to 2 days, truly. But let's just call it 1 to 2 week, possibly 3 to 5 days. 185.62 is your ceiling. And if we open and close below it on Monday, this market is susceptible to falling back into the 176.84 to 177.68 region, possibly within the week. Inversely, pushing or opening above 185.62 does signal 189.44 intraday, while closing today above 185.62 signals 192.61 within 1 to 3 days, perhaps 3 to 5 at the most. And over the next couple of weeks, say by the end of next week, we could push into this 195.99 to 197.97 region. Now, this area has not been weighted properly. I should have changed that before going to video. But had I seen it, I would have weighted this as a 3-star resistance area. So I just want you to kind of note that if we close above 185.62, we have a 1 to 2 week target, 3 weeks at the most, into the 195.99 to 197.97 region, where we can tap out on a weekly basis, possibly fall away from here for several weeks. And if we close above 197.97, that is our significant buy signal as we move into March trade. I don't think I have it noted anywhere. I don't. But it would be into the 210s. There is this channel bottom, a new one based in part on Friday's low. If you take a trend line off these lows and project it off this December high, it'll put you into the 210s. And that is our significant long-term resistance area that I've been mentioning actually now for weeks, that as we slip into the upper 170s, and we did again last Friday, you can then prepare for, say, the 210 area roughly, which is a moving target. And that could mean just reaching for 210 strike out of the money calls that don't expire for at least several months. I'd go 5-6 months out on that. But in terms of, once again, this image here says a lot. For those of you who like to trade 3 to 5 days out to 2 to 3 weeks, 185.62 is your upward pivot point as we move into later February. But until then, as long as we're not able to close above it, this market probably will this week fall back into this 176.84 to 177.68 region, where profits can be taken on a short position and long entry pursued as we move not only through the rest of the week, but really into the second quarter. We can come off of here. Inversely, closing above 185.62, once again 192.61 expected within several days. This 195.99 to 197.97 region within a couple of weeks, where we can top out on a weekly basis and a meaningful upside continuation point as we move through the rest of February and into early March. I don't think there's really anything else to say. I'm just going to say please click like, share, subscribe. Check out wickedstocks.com for all the good stuff that we offer on a daily basis. We offer a 5-day free trial, so if you don't like what you see, after 5 days, you can bow out at no cost to you whatsoever. I'm going to be back then again tomorrow with Tuesday's Apple Report, and you have a great day.